The local exchange is poised to edge lower today in line with world markets. The all share on track for its first weekly loss this year after disappointing quarterly earnings reports from the United States tech companies. Matete Thulare is head of foreign exchange execution at Rand Merchant Bank, joining us this morning to give us a quick run of how the JSE is faring in early trade. Mr. Thulare, top of the morning to you. Let's start with the Rand, marginally weaker in early trade, but it seems to be firming now. Talk us through some of the trends affecting trade.
Good morning, buddy, as we welcome the month of love, which is February. So I suppose the Rand has spent most of yesterday consolidating. I think the local unit, we saw it's trading down to 16.95, which is obviously a big support level as the dollar has come under pressure across the board. However, the strength that we saw yesterday was very much short-lived, and we finished the day around the 17.05 again as the dollar reversed some of its earlier losses. Now, later today, all eyes will be on the U.S. when they publish their January non-farm payroll numbers together with the unemployment numbers. And I suppose now this morning the Rand gets underway at 17.09 to the dollar ahead of the U.S. data. Expect for a bit of range trading and also consolidation between that 16.95 to 17.15 level as we await the numbers at 2:30 this afternoon.
Yeah, let's talk gold prices. They've steadied so far today after a sharp sell-off in the previous session. What's influencing trade there?
So look, gold has steadied near a 9-month high after comments from the Federal Reserve suggested that the aggressive cycle of rate hikes is coming to an end. Now, gold has rallied for the past 3 straight months through January. This is the longest such a sequence since the middle of 2020. And this is largely on the signs that the Fed is getting less aggressive with their interest rate hikes. Now, remember that gold usually benefits from lower interest rates globally. So that's why you're seeing this move with the gold price shifting higher. But as we said, the focus will now shift towards the U.S. economic data to see if the growth is weakening and if indeed inflation is falling. In that way, it would trigger monetary loosening and less interest rate hikes. But the next big move for gold prices will come from the next round of inflation data that is expected to come in the next few weeks from the rest of the world.
Let's talk about the central banks, a few of them publishing their rate decisions this week. Give us your quick roundup of those sentiments and what the outlook might be.
If you think about it, Claudia, over the past week, it's just been central bank, central bank, central bank. And I think it started with our local central bank last week, and then it started off this week with the Fed. And if you just look at the Fed, they've turned the corner. They're saying they've turned the corner in the fight against inflation. They've obviously giving the markets a boost in confidence that the hiking campaign that they've been doing is obviously nearing an end already. We're starting to see a dovish tone, although they're signaling that the interest rates would continue to rise, and that already now we need to acknowledge that slowing inflation is obviously that is something that is coming through. But nonetheless, if you look at the ECB that came out yesterday, as expected, they hiked by 50 basis points. They've already told us that they're going to hike again next month by another 50 basis points. But they said the same thing that everyone keeps saying. The risks for inflation and growth have become more balanced, with the economy proving more resilient throughout the Eurozone. But headline inflation is still coming down, but the inflationary pressures are still alive and kicking. And speculation is obviously how soon will they start slowing down, together with the BOE that also came out yesterday to say, look, they're turning the corner, but it's still very early days because the inflation has turned around the corner, but we still have all these global risks, like the rise of Russia and Ukraine is still on the force. So let's not think that we're out of the woods as yet, but it looks like the hiking campaign from all the central banks globally is obviously starting to slow down.
Oh, that's good news. What a relief. All right, let's talk company news. RCL Foods saying it expects its half-year profits to fall by as much as 26.8%, and this is due to the high commodity and energy costs in its chicken and banking businesses. Help us make sense of their numbers.
So if you remember, RCL, they're the brand that owns Salati Sugar, Omo Rust, Rainbow Chicken brands, and obviously they said the 6 months ending to December, they're expecting profit to be between 20 to 25% lower. As you rightfully say, it is due to the high commodity prices, the energy costs. Obviously, that sent their share down more than 6% yesterday, but already food and consumer companies worldwide have been grappling with, soaring cost of raw materials, energy, transportation, packaging costs for over 2 years now. So if you think about it, a lot of consumers are starting to accept the price increases, but the hikes that we're seeing there only partially offset the higher input costs, and obviously this is squeezing the margins of the likes of RCL, and they've said above inflationary price increases are obviously impacting them, and really right now it looks like, it is going to be quite a tough time for them in terms of how do they manage their costs, because all these things together with load shedding obviously has added to the cost base, whilst obviously impacting their production and service levels, and that's why you are seeing that number that came out from them showing that there will be 25% lower in terms of revenue for the next financial year.
Yeah, let's conclude with Supergroup also publishing a trading statement and operational update. How are they looking?
It's quite an interesting one from the Supergroup because they've had their best year on their JSE in more than 2 years. Yesterday, obviously, after they posted headline profits that could rise by at least 25% for the 6 months that ended December. I mean, in their operational update that they issued yesterday, they stated that revenue growth was driven by strong commodity, transportation costs, and obviously the consumer supply chain performances that they've seen in Africa, where they bagged new business and also contract renewals. And also, I think rigorous cost management has helped them mitigate the escalating inflation costs, also the diesel price increases, and also the currency fluctuation. I mean, the execution of their robust growth strategy has been all their divisions, it produced excellent financial performance in the past 6 months. And I think this is achieved in the backdrop of the rising inflation that we've seen, the diesel prices, the rand volatility, and also I think another key factor for them is already the technological expertise that is a key differentiator for the group. And I think this is for them, enabling them to better anticipate and exploit the digital landscape and obviously improve from the operational efficiencies and also the cost reductions that they've seen in the company. So I think for them, relative to other companies, 25% up in terms of profit, that's a great number. That's why we've seen them having their best day of the JSE yesterday.
Matete Thulare, let me thank you very much for that markets update.